I'm Caroline Hyde. This is Bloomberg Technology. Coming up, the tech earnings season heats up with Qualcomm, AT&T and eBay all reporting after the bell. The results ahead as the Dow clocks in above 20,000. Plus, Cisco swoops in. CEO Chuck Robbins tells us how its $3.7 billion acquisition of AppDynamics terminated the first major tech IPO of 2017. And finally, Lucky Money turns digital. With the help of Tencent's messaging app WeChat, we take you to Shenzhen to show you how the Chinese tech giant is gearing up for the Lunar New Year. First to our lead. The earnings parade continues. Qualcomm, AT&T, eBay reporting results after the close. Let's start with Qualcomm, the chipmaker reporting sales that came in just shy of estimates, and it's giving guidance that may miss sales and profit estimates in the current period. And as you can currently see on the Bloomberg, trading just slightly lower in after-hours trade. Here to break down the results, I'm joined by Bloomberg editor-at-large Corey Johnson. Pour through all these numbers for us, because glass half empty, it seems, for the investor base of Qualcomm.
Yeah, I think that these numbers for Qualcomm are kind of in line with what the company's been giving us here, which are sort of diminishing returns. They had terrific growth as smartphones became bigger and bigger if you take the long view. But now that that business is a saturated business and a replacement business, the growth just isn't there the way that it had been in the past.
And of course, one major key concern has been on every front they're seeming to be attacked, whether it be competition, but also notably, in some ways, the litigation that they now face to do with licensing. Any updates in that respect? We've seen the CEO starting to talk out about this.
Yeah, well, indeed. So we know they're facing antitrust challenges in South Korea, which has been going on and on for a long time, now in the U.S., and then this suit from Apple. The CEO, Steve Mollenkopf, was actually asked about this and about what he thought the relationship was going to be like with Apple. Listen to what he had to say.
We intend to remain a good supplier to Apple, even while this dispute continues, and believe there is no better long-term partner for Apple than Qualcomm and our industry-leading technology. We believe that our strong and highly differentiated product roadmap will continue to be the foundation for our relationship and covers a broad range of technologies that will be fundamental to new products for years to come.
And to that point, I mean, what we saw from the company in terms of margins was pretty strong here. We saw 6.9% gross margins for the company. And that maybe suggests that the Apple sales into the quarter were strong. And
just how important the licensing is when it comes to the profit. It's the major driver.
Of course, yeah. I mean, it's a fascinating business model. They've exploded to terrific success where they create great designs for chips and let other people deal with the hassle of making them.
And they charge by what the cost of the phone is, not perhaps what the cost of the chip is. Let's switch it on again, because I want to look at eBay. It is jumping after hours trading. We're up about 7%. The numbers don't look that phenomenal. We've seen fourth quarter come in line. First quarter forecasts, though, look to be relatively hopeful.
That's all about the analysts, I think, more than anything else. What you're seeing is what the analysts under-predicted. But what you saw from this business was a little bit of progress here, particularly with their Snapchat, with their business in selling tickets, so the StubHub business. StubHub saw revenues up 5%, but you saw sales, or so gross merchandise volume up 5%, but revenues up 20%, and that was really strong for them, and it shows that they really are capturing some sort of higher margin, better pieces of the online sales business.
Because there have been some concerns that Amazon might be eating into some of their auto part that they've led the charge in some respects. Competition seems to be a concern, but also with eBay, they are trying to do a swift turnaround to try and make it easier for you and I to wade through the billion products that they offer us.
Look, for 15, 20 years, Amazon has been targeting eBay in one way or another. It's why eBay bought PayPal. They didn't want it to fall into the hands of Amazon because they had so much of their transaction history. The car business, Amazon really let it get away from them, and eBay dominates there. Auto parts is something Amazon's now starting to look at, but eBay is dominant in that sector as well. Long-term, eBay might want to be concerned about it, but right now they own that business.
And let's make it three a charm. AT&T.
Yes.
Well, a little bit. We pre-released. We knew it was slightly coming up in terms of subscriptions when it comes to AT&T. Anything about the Time Warner deal at all?
Nothing to report there in terms of progress. These results were not as bad as Verizon's. That's about as good as you can say. They were not very strong results. You saw a 1% decline year over year in sales. Verizon was down 6% year over year. So Verizon and AT&T both hurting on the top line. The DirecTV acquisition is looking to get maybe not have been the best idea for this company. An enormously expensive acquisition. What we see is DirecTV is losing customers, and that's not good for these guys. So the Time Warner merger, maybe they're just hoping for some adjacent businesses, because now they're really having less. Strangely, we're here after all the effort, after so many decades of trying to add wireless. It looks like the businesses that have the least wireless are actually the ones that worry Wall Street the least.
And we'll put this all in the flavour of a record-breaking day of the markets once again. We'll dig into that in a little moment, but these are companies that, even though it didn't seem that Qualcomm is rather hasn't hit targets today, generally tech seems to be on track when it comes to the earnings thus far.
Well, I mean, the market overall seems to be taking a risk-on notion on its sort of day-to-day trading and willing to go towards stocks that are a little more risky. I thought what really actually interesting was the Cisco acquisition of AppNation here at an infinitely higher price than they were going to go out at an IPO. And it suggests that some corporate decisions, which are much more important long-term than any short-term trading, are being made based on the valuations that the market might be willing to give some of these companies. And
interesting, they've probably got cash to splash and maybe even more cash to repatriate.
Yeah, if that happens.
See if that trend continues. As ever, Corey Johnson, great analysis. Thanks so much for joining us. And we'll continue our discussion of eBay earnings later in the hour with Michael Giacone, CEO of Button, which just expanded its partnerships with the e-commerce giant. And the overall markets continue its record climb, as we were just mentioning there. All three US averages closing at all-time highs after corporate earnings reignited investors' optimism in growth, as we heard there from Corey talking about the risk-on appetite. Check out the Dow. We're trading above 20,000. Look at the IMAP. Now, this is a great function, if you've got your Bloomberg in front of you, breaks down how we see the sectors really particularly win. You know that IT is a big player within NASDAQ, but where is it in the Dow today? Up. You look, it's the second best performer. We're seeing it up 1.06%, helping drive forward those record-breaking numbers. 20,000. You'll remember where you were when you saw that number. Coming up, AppDynamics was on track to be the first major US tech IPO. That was before Cisco decided to snatch it up. We speak with Cisco CEO Chuck Robbins on the acquisition. That's next. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Now, Samsung isn't the only company with battery issues, it seems. HP has recalled over 100,000 lithium-ion batteries used in laptops. This recall is not new, but instead an expansion of the 41,000 recalled back in June 2016. The Consumer Product Safety Commission stated the reason for the recall is possible overheating that can pose, quote, fire and burn hazards. HP says it'll provide a free battery replacement for each verified eligible battery. And Cisco is making an acquisition. The world's biggest maker of networking gear is acquiring AppDynamics for a cool $3.7 billion. Now, Cisco snatched the software maker just before it planned to go public. It was scheduled to price the initial public offering Wednesday in this year's first major US technology IPO. Now, Bloomberg's Daybreak America team spoke to Cisco CEO Chuck Robbins earlier on the news. Take a listen.
Yesterday was a great day for us, and we had on display two great levers of how we drive innovation in our portfolio. In the morning, we launched Cisco SparkBoard, which will fundamentally revolutionize, meetings in business. And one of the headlines was that it was the coolest product that Cisco's ever built. And then in the afternoon, we made the acquisition of AppDynamics, which we think is a tremendous synergistic acquisition for us. And if you look at AppDynamics, it's a cloud-based application performance management system, but in reality what they do is they translate application performance into business insights for the customer, and they do it across both private cloud and public cloud. And so we think that the synergy of what we see at the infrastructure level and what they see at the application layer actually creates visibility that no other company in the industry can provide to our customers. So we're very excited about it. I was there yesterday. 15 minutes after we made the announcement, I addressed the employee base, and I think they're pretty excited as well. So it was a good day for us.
So good for you. But I have a couple of questions about the deal itself, because you paid a pretty good price. I mean, pretty high price, I should say, $3.7 billion. There were reports that the IPO was going to go in for something like half of that. And also, it is a startup, and so it is not, as I understand it, making money. Is it dilutive? Is the price right? And at what point does it become accretive?
Well, David, when we looked at the company, there's a few things that we looked at that I think are important for us to understand. First is they are absolutely the best company in this space. Secondly, they're growing twice as fast as their nearest competitor. Third, they're growing faster than any publicly traded software company today.
That was Cisco CEO Chuck Robbins. Now, staying with Cisco's latest acquisition, the record-breaking sale values AppDynamics at about 18 times the company's revenue in the past 12 months. That's good news for investors, and I'm very pleased to say joining us now is one of those investors, Ashim Chananda. He is partner at Greylock Partners, who co-led Series A, Series B rounds in AppDynamics. Ashim, I have to say, hats off to you. Congratulations, because how much did you put in the Series A, and what is the reward?
I think the Series A investment back in April 2008 was, the total round was about $5.5 million. And I think the company was valued at about $12.5 million at the time. And, two venture firms put in $2.75 million each. So
it's valued at $11.5 million. It is now valued at $3.7 billion. That must be such a reward for you. And did this take you by surprise? How long was this? We understand there were talks with Cisco late at night in hotels. When did you get the offer on the table?
So we actually signed the agreement with Cisco literally minutes before it was announced yesterday.
Wow.
So, we were really proceeding down the path to be a public company. And, I think the strong belief in the company's management team and the board that this could be a multi-billion-dollar business looking forward. And, Cisco and the company did know each other. And, a few days ago, Chuck, the CEO at Cisco, invited the CEO of AppDynamics over to his home. And that led to some very, intense conversations. And, with Cisco's management team. And I think the, and the AppDynamics team, came to the conclusion that, merging with Cisco, could really help accelerate the mission of the company and, gain market share much, much faster. If it had listed, do you think it would have got to a $3.7 billion valuation anytime soon? It's hard to really tell exactly just because we didn't go public, but the IPO roadshow was very, very strong. Within a couple of days, the offering was completely oversubscribed. So, the best data we have is that if we had got public tomorrow, it would have been a very, very strong IPO and would have likely traded up. So
I think it's fascinating. I mean, you've been on the board of AppDynamics. In fact, Greylock helped this company grow. It was the first offices that were provided. They were working in Greylock with you when this company was first born in 2008. Do you think, apart from the price tag, Cisco is the right way to go rather than listing?
I think every company has to make their own determination on whether they continue as a public company or go, or are acquired at some point in their life cycle. Cisco is clearly a world-class technology company with, world-class, reach, a world-class management team, just incredible resources. So, I think Cisco can be just an excellent home for AppDynamics, both in terms of extending reach for the product line very, very quickly, across the world's largest enterprises, and also in terms of synergy, with the infrastructure monitoring data that Cisco has. So combining that data with the application and business performance data that AppDynamics has today can be really, really powerful looking forward.
What does this say to the highly valued unicorns that are out there at the moment, looking at the market, wondering whether to IPO, wondering whether to go to be acquired? Do you think this might put off others going public?
I don't think so, because I think actually, the indication from the roadshow that the company undertook is that the public markets seem to be very, very open and very receptive for the best technology businesses. I was in the roadshow, the group lunch in San Francisco just 2 days ago, and it was standing room only. The room was full of public market investors. There was a very rich dialogue going on. So, just this morning, my email's full of email messages from a number of public market investors around the country just saying, hey, congrats, but saying, like, we really wanted to kind of, purchase stock in this company.
And so now when you're looking at the money you've returned your fund and then some, it would seem. Where do you next put money when you're looking at Greylock? What's the hottest thing? You've shown the way that you're a right stock picker when it comes to it.
Yeah, so at Greylock, we're fortunate to have two very strong practices. One is the enterprise technology practice, and the other is consumer. I spend my time on the enterprise side, and on enterprise, really focused on the world's 20,000 largest companies, which is really where the world's IT budget lies. So I'd say maybe just two themes I'd say that I'm intrigued by right now is one is just taking AI and machine learning and applying it to use cases that can be deployed in very, very large companies, and seeing value in that and customer and business value. And the other is cybersecurity continues to be an area that's very, very opportune. So continue to look at that area.
Well, I hope the rest of the world watches where you put your money next as well, because if it's anything like the reward this time round, we should be following your example. Ashim, thank you for joining us. It's Ashim Chandana. He's Greylock partner and investor in App Dynamics.
Thank you. Thank you.
Now, coming up, China's biggest internet giants are vying for the attention of smartphone users for the upcoming Lunar New Year holiday. We'll take you inside Tencent's headquarters in Shenzhen for the closer look at the mobile payment strategy. This is Bloomberg. Now, the Chinese Lunar New Year tradition of handing out cash-stuffed red envelopes has entered the 21st century. It's migrated to the smartphone, with millions of people expected to send gifts digitally over the coming days. Now, according to Tencent, that's WeChat's parent company, users sent more than $8 billion of digital red envelopes in one day last year. With mobile transactions more than doubling to $235 billion, Bloomberg News reporter Tom McKenzie went inside Tencent's headquarters in Shenzhen.
Chinese New Year is a boon for China's mobile payment companies, thanks in large part to the digitization of this centuries-old tradition. Well over 1 billion mobile transactions are expected this year as people fire off virtual red envelope cash gifts via their phones. Valued at just $32 million in 2012, China's mobile payment market was worth $1.8 trillion last year, according to iResearch. Tencent's WeChat and Alibaba-affiliated Ant Financial's Alipay are the two big rivals in this space. Their apps allow you to do everything from buying a latte to taking out a personal loan. It's all about getting an edge.
那么在最近几年，可能已经涌现出来
In recent years, we've seen many players emerging in the mobile payments markets, including commercial banks and other third-party payment platforms. The competition here is so fierce, it's almost brutal.
With more and more Chinese embracing mobile payments, Alipay and WeChat have come to dominate with around 90% market share. And that has drawn the attention of regulators, who are expected to ramp up controls this year. The People's Bank of China wants companies like Ant Financial to register their deposits at state-owned banks. It's also developing its own cryptocurrency that could be used in online transactions.
We follow all the regulatory guidelines of any institution offering financial services. And as that adapts, which it has continuously adapted and no doubt will continue to adapt, we adjust our model to reflect what the regulations require.
China's banks are certainly feeling the pain. Market research firms estimate lenders here lost about $22 billion in payment revenue to Alipay and WeChat in 2015. That disruption isn't stopping at China's borders. Ant Financial is trying to capitalize on the 150 million Chinese who travel abroad every year, teaming up with vendors in key tourist destinations to provide their services. It's also invested in India's PayTM and is eyeing further expansion elsewhere.
So I think you'll see most of the activity in this region, but we look very closely at the US, at Europe, and what's the right strategy there as well. And so we really do have a global perspective and global ambition, and we'll roll that out as we determine the right partners and move forward with them.
China's mobile payment giants are on a roll, but succeeding abroad is likely to be their biggest challenge yet.
Bloomberg News reporter Tom McKenzie joins us live now from Beijing. Thank you for getting up so early for us, Tom. And give us, you talked there in the piece, you interviewed a lady who said about the brutal competition that there was. Who are the key competitors now to the likes of Alipay and to WeChat, and how are they tackling with it?
Yeah, well, I mean, first of all, there is a lot of bloodletting between both WeChat and Alipay, and WeChat has expanded its market share in 2014 from around 11% to around 20% last year, whereas Alipay has seen its market share fall off from about 82% to 68% in the same period. And then, of course, you've got the other competitors, as you pointed to. So Apple Pay, they launched. We've also got Huawei, the big smartphone maker here in China. They've got their own payment system. Samsung, of course, Android. But also the internet search company here, Baidu. They've got their Baidu wallet, and JD.com, which has got JD Finance, looking at the wealth management side of things. In terms of what Alipay and WeChat are offering, they've got this ecosystem, so apps within an app that makes it very, very easy to use their mobile payment systems to do all these sorts of different things, whether that is managing your wealth or buying flights to travel abroad. So for the challenges, they have to take on that element of things. In terms of Apple, of course, they've got the brand strength here, still a very popular smartphone maker, but they use these NFC codes rather than the QR codes that are so popular in China, and it's mostly in-store purchases and purchases for apps. So it's going to be a challenge for Apple to carve out market share here.
And quickly, Tom, you mentioned about global expansion, India. What's happening there?
So Alipay have been leading the march on this one. They've teamed up with banks in Europe, particularly Barclays, BNP Paribas. You can now use Alipay in stores in London like Harrods and Selfridges. They've also teamed up with Verifone in the US. So Alipay making a big push on this. Again, it comes down to branding and brand recognition. Have they got that clout, and can they take on the likes of Apple Pay in the US? That's going to be a key challenge for them. For the moment, they're focused on that huge number of Chinese tourists that travel abroad every year, 150 million as it stands. Caroline?
And focused on those red envelopes. Bloomberg News reporter Tom McKenzie, thanks so much. Now coming up, the startup that helps the likes of Uber and OpenTable find customers through other apps just raised its Series B. We'll speak with the CEO of how the future of mobile commerce in app integration. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Prime Minister Theresa May told the UK Parliament she is not afraid to speak frankly to a president of the United States. She meets Friday in Washington with President Trump. May says she wants to represent the UK's interests and secure a trade deal. She will be the first foreign leader to visit the president. A pair of Russian bombers flew around Japan today, forcing the Japanese military to scramble fighter jets as the North American Aerospace Defense Command increased its threat posture. That is according to Fox News, citing defense officials. Brazil has ordered 11.5 million doses of yellow fever vaccines as it grapples with the largest outbreak of the disease since 2000. Officials say 70 cases, including 40 deaths, have been confirmed. More than 300 cases are still being investigated. Italy's Prime Minister, Paolo Gentiloni, acknowledged delays and malfunctioning in the country's response to the avalanche that buried a mountain hotel. The death toll is now 24. Rescue workers have all but ruled out finding any of the 5 people still missing alive. Usain Bolt has lost one of his 9 Olympic gold medals in a doping case involving a teammate, Nesta Carter. The IOC says Carter tested positive for a banned stimulant in a retesting of samples from the 2008 Beijing Games. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Wednesday here in New York, already 9:30 Thursday morning in Sydney. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Good morning, Elisa. Well, we're off to a bright start in New Zealand, as you'd expect. The NZX up a third of 1%, 90 minutes into Thursday trade after that very impressive lead from Wall Street. The New Zealand dollar also up on stronger than expected consumer prices for the fourth quarter, an annualised figure now of 1.3%, still below the RBNZ's target range. And New Zealand's budget deficit also coming in narrower than expected for the first 5 months. And Nikkei futures also looking positive, but the ASX here in Australia closed today for the Australia Day public holiday. Watch out, however, on Bloomberg later on for an interview with Qantas CEO Alan Joyce on the reinstatement of a direct route between Sydney and Beijing. Also worth watching, Kia Motors shares out of South Korea. It's not been a great year for Kia shareholders. South Korea's biggest car maker also slipped more than 2% on Wednesday, and analysts have lowered their earnings expectations for Kia. A little bit of data out today as well, Chinese industrial profits and Japan PPI services. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. Back to our top story, tech earnings. Let's check back with Qualcomm. Shares have been dipping in post-market trading, off by now 2.4%. The chipmaker reporting sales that came in shy of estimates, and it's giving guidance that may miss sales and profit estimates in the current period. And on to AT&T holding its conference call. CEO Randall Stephenson telling investors they are planning to sub 2% growth. But, well, in fact, taxes are cut, hint, hint, nudge, nudge, wink, wink, well, the company could see better than positive 2%. And another company we're watching, eBay, reporting 2017 revenue forecasts that top estimates. Shares popping in extended trading on the news. Gross merchandise volume, that's the value of all goods sold on the platform, increased 2% in the fourth quarter. eBay has been working to accelerate growth, rebranding and launching a data initiative to entice shoppers, making it easier for you to find your goods. The company has been facing increasing competition from the likes of Amazon and brick-and-mortar retailers who are migrating online. I'm pleased to say joining us from New York is Michael Giacone, CEO of Button. That's a startup that lets mobile apps integrate with one another, including eBay, and also knows a thing or two about e-commerce, having been the CEO of Rakuten. Thank you very much for joining us, Michael. And first of all, the turnaround at eBay seems to be working. Looking back to your experience at Rakuten, are they going at it the right way?
Yeah, Caroline, thank you so much for having me. Let me clarify, I wasn't the CEO of Rakuten, but just a division of Rakuten. And the experience there, you know, what we were always amazed by was the power of a marketplace dynamic. eBay, of course, relying on its sellers as really the blood of the system there. You've got immediate scale. You obviously see Amazon dipping more and more into their marketplace business, and I think this is because it really enables a beautiful scale dynamic where anyone, anywhere can list and sell products, and that type of empowerment was something I knew we pursued with zest at Rakuten, but I know is fueling a lot of the eBay growth and success.
Apologies for that. You were head of Rakuten Loyalty, I believe.
Yes, yes.
Let us know about how you see the offline to online world coming as well. Is the competition fierce? Do you think some of the offline players are getting it when it comes to online retailing?
Yeah, you know, I think you're seeing an evolution where people are starting to recognize that there is an importance in investing in new technology, whereas, you know, 15 and 10 years ago even, you had people establishing a viewpoint that, hey, mobile or internet was going to be a short-lived trend. I think in Walmart's acquisition of Jet recently, you're seeing companies of the largest magnitude really double down on bridging a strategy that allows them to be players in the online world. An exciting one and one of the interesting ones was, you know, an investment by Staples and managed by Q. I think that was another really cool example of two companies working together that really, if you thought back 10 years, you'd have a difficult time predicting that was going to happen.
And talking of companies that are working with each other, Michael, that's what your app does, helping the integration of two apps with each other. And you've been helping at Button, eBay itself. Where do you see that going?
Yeah, it's exciting. So Button, you know, a 2.5-year-old company, we're basically trying to correct some issues that we see as really broken in the mobile ecosystem, but that fueled tremendous growth and opportunity in the desktop era. So for us, with eBay and other companies within our marketplace, the objective really is to help them find buyers and purchasers in places that it would be difficult for them to connect to. So the marketplace that we've created is really designed to give them the opportunity to find more purchasers in places that they would have difficulty building integrations into and scaling because of the complexity of the mobile platforms.
I mean, and let's dig into Button a little bit more, because We understand that you have a new funding round. You now brought, is it 20 million more on board? You're now at 34 million in total. Talk to us about the expansion plans for this business.
Yeah, so what's really exciting is, we've started to validate where we see issue in the market today and kind of what Button's trying to solve. As I talked about, linking structures are broken. So if you think about your own use cases as a user, when you uttered the words "I want" during the desktop era, you would follow that with a query of Google. And if you say "I want" in today's world, you're often opening an app to solve that problem, right? And so this paradigm has shifted, but what hasn't shifted is the ease of use of creating links to build partnerships, to build experiences that solve what consumers need and what they're looking for. So if you think about a click from Google into a search result and a product page, or a link from Ibotta, a popular deal property that is linking to retailers, or from MetaSearch, looking for hotels and ultimately making a booking. A lot of those flows are broken in mobile, and so what this $20 million is going to do is really help us continue to invest in the team, expand internationally, and double down on the strategies and the performance that we're starting to see come through the platform.
And Michael, I've got to ask you, on a day that we've seen a company about to go public and get snapped up by a larger rival, what's your dream for Button? Is it to go public? Is it acquisitions? What do you see folding into other companies?
Yeah, it's a great question, and every entrepreneur thinks about it and dreams about it. My pledge when I started Button was I really wanted to build a company that I would be proud of, and for me, what that meant was building a place where we could foster growth of our team. We were voted the #1 place to work in New York, and we're grateful to that, and that's really because we think we've invested a ton in making this a location and a place where people can come, grow their careers, and we think if we can do that, we'll attract the best, and if we can attract the best, we think the sky's the limit. So I don't want to say that I have ambitions to sell to anyone. I'd love if we were good enough and smart enough and lucky enough to ring a bell one day, but that's a ways away.
Well, Michael Ciccone, the war on talent in the meantime, CEO of Button, thank you for your time today. Now, former Yahoo president Susan Decker is onto her next act, launching a social platform called Rafter this Wednesday. The idea is to create curated content around a specific conversation, filtering out all the noise that comes along with the social feeds on platforms like Twitter or Facebook. We sat down with Decker and asked her, why she decided to launch Rafter.
I think there's a great need for a way to communicate about the stories that we all follow together. And what I mean by stories is news that is an ongoing series like the presidential elections or sports teams or television and entertainment. These are the things that we all talk about at the water cooler at work. These are the things we talk about with our family in the living rooms. It's something we all do. And today, the current social media platforms are not ideal for conversations. And so we feel like the opportunity is very available for an engaging conversation platform.
Why is, for example, Facebook, Twitter not a good platform for conversations? Because in a way, many feel that there was an awful lot put out in terms of people's own viewpoints on these social media areas.
Yeah, it's a great question, and I think they're both terrific companies and serve a terrific purpose. If you look at Facebook first, I think the market for personal content, the things that we do every day, the triumphs with our kids and our friends, that sort of stratified with Instagram being the widest reach, the top moments, Facebook being your highlight reel from which you pick your top moment on Instagram, and Snapchat being the engaging conversation place that people have more intimate conversations. And I think the same is going to happen with the personal content, with professional content that's on Twitter, whether it's news, sports, entertainment. Today, I think Twitter's moving up to that broad reach, breaking news, great for celebrities, one-to-many. It's not the safest and most conducive place for conversations. A lot of people feel nervous about trolls. They feel it's worried about and hard to use. But there is an opportunity for a more engaging, fun kind of place to talk about these stories with your friends that is very much consistent with what Twitter's doing.
So how will Rafter protect people? How will you ensure that there isn't trolling? How will you ensure that you don't have the knock-on effects of, in many ways, the fake news that has become so much a concern to many?
Yeah, it's a great question. I don't know that we can ever fully protect it. It is the internet, after all. I'm sure that we'll see some of those same issues. But I think we've tried to build in some safeguards. So, for example, we have a phone number as our registration. So, and most people only have one phone. So you can't create 30 email accounts under different pseudonyms and troll in the same way that is possible on other networks, and that was a very deliberate decision. In addition, we have curators, content curators, that are writing for us each week, and they're linking the best content, and they're governing what kinds of content is linked to the kinds of episodes that we produce. So we have a few safeguards in place that we think will help make it safe, will help make it less susceptible to some of the problems that are out there today.
Curation has become a big key talking point, and about whether the human is better than the automation. Are you going to be mixing a bit of both, or is it really just human people who are deciding which stories are of most prevalence, which have the most authority and indeed the most true?
You know, we do a mix of both. So first, our users vote with their feet, right? There are 30 million people who follow on Twitter and Facebook the kinds of stories that we are offering. We looked at what people are talking about, what kinds of stories they want to talk about, and right away the human opinion is a part of how we select and curate our stories. Secondly, we're architected around following stories, not following people, and that's the key difference versus other social networks. What happens with other social networks is you're going to get information from your friends and friends of friends and friends of friends, and those circles are getting wider and wider. And sometimes your interests don't overlap necessarily with all of your social graphs. Ours is designed from the get-go to be just following the stories that you care about, and so you're self-selecting. That's where our algorithm comes in, and the technology is that we're only serving posts and serving you stories that are ones that you follow.
That was former Yahoo president and now co-founder of Rafter, Susan Decker. Now up next, AppDynamics IPO is officially off. We'll dive into what this means for the upcoming batch of tech IPOs. Next, this is Bloomberg. Now turning back to a top story of the day, and that's Cisco's buzzer-beater purchase of AppDynamics just before it planned to go public. With the first major tech IPO of the year down the drain, what's next for the tech companies pondering going public? And will this spark a flurry of tech M&A? Joining us now to deep dive on it is PwC US Technology Deals leader Todd Page and Bloomberg's IPO reporter Alex Barinka. Alex, you were here hot on the heels of the first tech IPO of 2017, and while you got on the plane, no more. I mean, how often does this happen?
This soon, or this close to listing day, almost never. I mean, it was supposed to price tonight. Tonight at 5 o'clock Eastern was supposed to be that pricing call to decide what the market value was going to be. And, you know, Cisco did come in at a valuation, $3.7 billion. It's a lot higher than the $1.7 billion, which was the high end of the market value they were going for. But this is not a common occurrence. We saw Blue Coat last year get bought by Symantec, but they weren't on the road yet. This company, AppDynamics, had done all of their meetings. They had done their road shows. Investors were excited, and I guess Cisco was more excited and willing to pull the trigger on a buyout.
And Susan, could this become a theme? Could road shows just make it all the more hot for bigger tech companies, rivals, to buy in and take them off the market?
Yeah, well, I mean, certainly, presciently, we mentioned in our report this year that this coming year there's a lot of companies in the IPO pipeline. There's 30 or 40 companies that we're expecting have a good chance to come out this year. But we purposely used the language that they will have an exit this year. That doesn't necessarily mean they'll have an IPO, but they will have an exit. And I think a lot of those companies, especially if you get into the mid-range of the valuation group, not the big names that you see, but the next tier down, I think a lot of those companies are absolutely willing to do a dual track and see what their options are.
If we stick with one track in the IPO track, I know there's one man out there who's rather hoping that this doesn't become a theme. And we did speak to Tom Farley, the president of NICE earlier. Have a listen.
We're expecting 10 IPOs in the next 3 weeks, including 4 on Friday. 3 operating company IPOs and a closed-end fund. And by the way, those 10 IPOs, they're really big IPOs.
Alex, this must have got bankers concerned.
It does. And the IPOs, the deals that Tom is talking about, those are a lot of big sponsor-backed companies outside of tech that we've been waiting to see for a while. Laureate, Geldwen, an education company, a window and door maker. They're kind of clearing out stuff. Exactly. They're clearing out the pipeline because last year was so choppy in equities, and now we have this Trump rally, and so people are taking advantage of it. It's a different story with some of these growthier tech companies. Yeah. What I'm hearing is the investors really, really want into them. They really want to buy into them, but there's no supply, and there's still no supply. We've heard about all of these companies going public, but it'll be interesting to see who does kind of test the waters next. Our sources tell us MuleSoft could be one of the next ones that goes in the next few months here. So all of these smaller names, but, you know, to your point, they are also the ones that when the strategics finally feel like they're willing to write the checks that that make the valuations that they raised in their last private rounds, these are the same kind of enterprise companies that we might see get bought out by the likes of Cisco.
I agree. And I mean, if you look at last year, again, it was a record year after a record year. But there was something really interesting about that record last year. A lot of the big name technology companies weren't the ones who were doing the buying. I mean,
nothing from Facebook, nothing from Amazon.
I mean, you go off all the traditional serial acquirers, they weren't actually buying.
So the pool is becoming wider.
And yet they've got the funds to do it. They are interested, and they see a lot of these companies bringing disruptive technologies. You're looking at cloud, you're looking at AI, especially within AI, machine and deep learning. Those are attractive assets that are disrupting every industry. And so it's not even just the Ciscos or the HPs, et cetera, of the world. It could be the Walmarts, it could be the Ford, it could be the P&G being an acquirer of these companies as well.
And Todson, how much do you think perhaps the carrot of Donald Trump's potentially repatriation of cash, is that something that could make the cash load in the pockets of the likes of Cisco's feel even heavier?
Yeah, absolutely. I mean, if I think of what are the potential positives and negatives of the new administration, I think the two negatives are potential higher regulatory review, and so that could be tougher for bigger deals. I think it's also potentially tougher for inbound deals. And then the other potential negative is this growing interest rate, and does that make it harder, especially for some of the private equity funds, to borrow money to do deals? But I mean, on the backside, I think cash repatriation coming in, I think the IPO market opening up and all these companies getting ready to do an exit of some sort. And, you know, many people look at the immigration as a bad thing in terms of H-1B visas, et cetera. If that really does become a problem, I think that also spurs acqui-hires, because you've got to find those people somewhere, and that could be you're acquiring them instead of bringing them in.
Well, a lady who will be across all the exits will be Alex Barinka. Thanks so much for joining us today. And PwC US Technology Deals Leader, Todson Page. Thanks for coming into the studio.
Thanks.
And still to come are Google's moonshots coming back to Earth. It's been a year since Alphabet announced its new holding company structure. We'll take a look at how its side projects are faring ahead of Thursday's earnings. This is Bloomberg. Google has ended its 12-year relationship with one of Washington's most prominent lobbying groups. The Podesta Group is no longer lobbying on behalf of Google. The lobbying group has long-standing ties to the Democratic Party and Hillary Clinton. Now, this change coincides with Google's bid to hire someone for conservative outreach. And, of course, as a Republican administration takes the White House. And speaking of Google, Alphabet will cap off its first full fiscal year under the new holding company structure when it reports fourth quarter results after the bell Thursday. Now, throughout the year, we've been following the company's transformation led by CFO Ruth Porat. Bloomberg Technology's Mark Bergen explains what's changed.
Google's moonshots are coming back down to earth. Its parent company Alphabet reports its fourth quarter earnings, and a lot of Wall Street is expecting that its advertising business is going to continue to report solid results. But some focus will be on what it calls the other bets, everything from its Nest thermostats to its self-driving cars. So Ruth Porat came on as CFO in 2015 from Morgan Stanley, and shortly thereafter there was the Alphabet structure where Google's trying to create these new businesses to run more like startups. Will they be kind of lean and also have a path to profitability? A lot of these projects have been sort of run like science experiments, and now they're having a lot more pressure to show revenue and show results in the short term. We know at previous times at Google, the reporting structure, even for kind of funding a project, was pretty lax. So these projects would get kind of unlimited budgets, and they wouldn't necessarily have to file expense reports. That's changed at a lot of the other bets, and that's even changed recently at Google itself. You know, there's been projects like Google Fiber, which ran for several years to deliver high-speed internet, that now they have these ambitious plans to go to much broader and bring it to a lot of different cities. Those have been pulled back. They recently are in plans to sell their satellite business called Skybox that they bought a couple of years ago. They've shut down a lot of the recent drone projects. So Alphabet has pulled back on a lot of projects that require hardware, but it is investing money in three core areas around artificial intelligence, around its cloud business, and around its biotech companies. So the future of Google's moonshots may not be actually sending something to the moon, but they may be a lot more focused on healthcare.
Bloomberg Technology's Mark Bergen there. Now, be sure to tune in on Thursday as we break down Alphabet earnings. Plus, in addition to Alphabet, we'll have full coverage and analysis as Microsoft, Intel, PayPal all report their quarterly results. That does it for this edition of Bloomberg Tech. Before we go, let's have a quick look at how the markets have been performing. Remember, tune in on Bloomberg Technology live streaming on Twitter. You can check us out at Bloomberg Tech TV. 5 p.m. New York, 2 p.m. San Francisco. What a day for the markets. Dow Jones Industrial Average above 20,000 at 68.51, up 0.8%. If you dig into that, you can see that it's the technology, one of the best performing sectors. S&P 500 up 0.8%. Now, in amongst that, of all the technology companies that have reported thus far, all of them have beaten when it's come to earnings surprises. And NASDAQ currently up almost 1 percentage point. That's it. This is Bloomberg Technology. Do tune in for tomorrow's report. Yet more earnings. Will we have yet more record highs?